Another crazy week for rates as the bond market is left to digest incoming economic data. Now, we did have a strong start to the week, some welcome improvements. However, Tuesday into Wednesday morning, we had some losses courtesy of European inflation data coming in higher than expected. European inflation, you might say, why does that matter? The US and European bond markets are a bit interwoven. So anything that indicates persistent inflation overseas is certainly going to have an impact here domestically. Now, the weakness on Wednesday was amplified by our own ISM manufacturing data, specifically the prices paid component. Prices paid is an indication of inflation, right? Increased prices paid down the supply chain will translate to increased prices for the consumer itself. So certainly indication, certainly a metric that the Fed is keeping a close eye on. Now, the meat of this week's losses came on Thursday, courtesy of our jobless claims and the labor cost index. Labor cost index, employment cost index, these are gauges of wage pressure, something the Fed has been very vocal about wanting to see slow. They're trying to tighten the labor market. So labor costs coming in higher than expected is certainly a concern for the Fed and a big reason why rates took off on Thursday. Now, the report that everyone had circled on their counters this week was Friday's ISM services data, which did come in higher than expected and understandably had an immediate negative reaction across the bond market. But it only lasted about an hour. Bond market reversed and continued lower through Friday's close. Definitely a welcome sight and will hopefully continue into next week. Now, keep in mind, any meaningful rate rally is going to depend on next Friday's jobs report coming out on the 10th, next Friday. If you remember, last month's jobs report that came out on February 3rd served as the primary catalyst for that crazy spike in rates for the last 30 days. So hopefully Friday will help continue the trend lower, help us reverse that course. Now, rates improving, inventory improving, home prices continue to stabilize. These items are definitely setting the tone for a very strong spring market. You have any questions about these headlines, about these recent market or rate trends, or if you want to talk about these recent changes that greatly benefit first-time home buyers and those pursuing VA and FHA financing, let's set up a call to talk about how to maximize your buying power. This is Billy.Saylor, your mortgage professor. Enjoy the rest of your weekend.